Julia Lee from Bill Direct has joined us. Craig Wolford from Citi remains on the panel because I put him on the spot. And secondly, and thirdly, Mark Christensen joins us from Pengana. And Mark runs a retail fund. I've asked him to look for retail stocks that pay good dividends. But Julia usually comes at this point in time. So let's kick off with you, Julia. You've been researching the retail sector and you come with a couple of stocks that you like.
Yeah, I've had a look on the smaller end. So they are a little bit up the risk scale, but I thought I'd focus in on companies that might be able to resist a downturn.
Okay.
We've been talking about a softening domestic economy and the impacts that might have on retail. And I guess back in 2008, one of the interesting things was the lipstick effect. And at a time when a lot of the retailers were struggling because of the global financial crisis, we actually saw L'Oreal increase sales by 5.3% that year. And it's called the lipstick effect, where people were still doing it tough, but they want those little luxuries. So for women, you know, a lipstick doesn't cost a lot. And there's a stock out there called Lovisa, which is fashion jewelry. It doesn't cost a lot. And they are looking at rapid expansion. In fact, they did a trial in the US, so they are looking to roll out in the US, which of course is a massive market. So I think Lovisa...
And they're purely an Australian company, are they?
They are purely an Australian company. They have been trialling a few different spots, but I think we're going to see strong growth. And the magic combination for me when it comes to retail stocks is growth in terms of comparable sales together with expanding the store footprint. And if you have that combination, then generally valuations should increase over time. Okay,
now we don't let Julia get away with blue moon just because she's a fine human being. Craig, have you ever run your eye over Lovisa and see whether you like that company?
Yeah, it's a stock that Citi covers and we are positive because of that international growth. And it is an interesting lens. There's not many Australian retailers that have gone offshore and more importantly done it successfully, but they have a very clear business model that they've successfully rolled out here in Australia and they've moved into Europe and the US market, which is so far so good. And as Julia says, if you've got that rollout potential, despite all the move towards online, a good store rollout story is still a great investment idea.
And Mark, I figure Lovisa is not a dividend-paying company at this point in time.
Well, most growth stocks aren't, because dividends usually have to be paid out of profit, and most growth stocks need that capital in order to grow the business. I guess the only downside I see to Lovisa is that it's a vertically integrated model, and that can be both a positive as well as a negative. A positive when times are going well, but when things fall apart, then the risks.
Julia, we have normal people watching this program, vertically integrated. Okay, I get it. I taught economics, but come on, just for explain.
So they look at manufacturing, so they have the product, the sales and marketing, as well as the stores. So in the case of Billabong, that was a vertically integrated model that didn't do so well, but it's working at the moment.
So Mark, I guess you haven't looked at Lovisa?
No. It's not as an income stock, that's right, but we look at all companies, and look, Lovisa we think is a very well managed company and a very well run company. It's done a great job first in the UK, I think was its first point of call offshore, and the US is in its sights for sure. The one thing we monitor with a stock like Lovisa, and there are some other stocks where each year there's a lot of pressure, if you like, on their merchandisers to get that year's decisions right. So, for example, Melbourne Cup this year, purple's, you make a big bet, we think purple's going to be the colour this year. And if you get that wrong, it can hurt you for that season. But look, they've got a very experienced buying and merchandising team, and I think as they go offshore, they'll diversify that risk away. That's probably the one thing we watch with.
Okay, they're telling me I'm getting short of time, but I don't care. It's my show. The next stock.
So, we've got the structural headwinds which are facing the industry, and I guess the big one is bricks to clicks. And bricks and mortar might be suffering, but on the flip side, if you've got a strong platform, think Amazon, well, you're seeing an increase in terms of sales, and you're able to adapt to who the customer is. So Temple & Webster.
Temple & Webster? Never heard of it.
Not one bricks and mortar store in Australia, only online, and it's Australia's largest online furniture store.
Oh, really? Okay. Well, we'll come back. We'll go to an ad break. I'll give you to my producer. But we'll come back. We'll see if these guys actually like Temple & Webster. But it's really one from left field, isn't it?
It's up 142% in the last 52 weeks.
Hoo-ha. And Mark, let's kick off with you, because Julie just threw Temple & Webster at us. And this is once again wouldn't be an income-paying stock, but you have an inside piece of information on one of the founders, I believe.
A bit off-camera talk, I might regret that. No, I think Temple & Webster is, I think it's an exciting prospect. You know, I mean, I think that they're finally finding the model and getting the strategy right. And as we pointed out, I think the share price has certainly reflected that over the last little while.
You know, I mentioned the fact you play basketball.
Yes. No, I do. I've got my kids go to school with some of the early founders.
Yeah, okay, good stuff, good stuff. All right, so let's, you saw I interviewed Jerry.
Yes.
His story is improving offshore rather than onshore.
Yes.
And he was quick to remind me, I think his yield was about 8% or something like that, which he kept rubbing in, hoping my viewers would actually note that. Is this a stock that you're willing to hold as a dividend payer?
We're not with Harvey Norman. We agree with them. I mean, the offshore story for Harvey Norman has been quite a success. And recently, management took a number of investors. I know, Craig, if you went up to Asia to have a look, and then the feedback from there has been generally quite positive. I think that's there is a good story for them to tell there. The issue is that by far the largest part of their earnings is still here domestic, and you know, it is exposed to that at the housing cycle, if you like. I think Harvey Norman, a very strong operator in that space. We think they're very good retailers in that space, but it's unavoidable, and I think that, you know, the recent sales growth trajectory shows that there is a lot of pressure on that category. So an 8% yield is quite attractive. We think that there could be a little bit of pressure on earnings in the biggest part of their business in the near term.
Craig?
Yeah, it's the challenge in the size of the business they've got here versus the growth prospects in both Malaysia and Singapore. You know, Australia's the lion's share of their business, and as a franchising structure, it's a little bit different as a business model. There tends to be quite a lot of leverage. So if things, you know, fall fast, then the earnings for Harvey Norman can collapse pretty quickly, and that dividend yield that's so attractive at the moment might get a bit tougher. They do Jerry likes to keep a clean balance sheet, you know, doesn't like a lot of debt, so, you know, if earnings do fall, you would expect the dividend to drop.
Yeah, but, you know, Julie, you often hear, you know, well, it's shorted, and sometimes we hear publicity from people who react to stories overseas, which means Jerry can't sue them, and they talk about they don't trust the accounts of Harvey Norman. Is this something that the whole industry agrees with, or just not quite sure?
Look, it's sometimes difficult to understand certain parts of the accounts, and I guess that's where a little bit of the controversy has been. But I guess looking at the model, cyclical factors don't last forever. So if you are looking at retail and there's a sustainable model that can work through some of the structural change that's happening in the industry, then if you're looking at counter-cyclical plays, the time to be looking at these type of retailers is when you are looking at a downturn in terms of the economy. The problem with jumping into counter-cyclical plays is that it's very difficult to time the exact bottom. So it's not unusual to see a 20% loss, 30% loss, which can be quite painful for a lot of investors before you see an uptick in terms of the cycle, and that starts to give you a few tailwinds instead of headwinds. But I guess for Jerry Harvey, the international expansion is pretty much why you'd be in a stock like that at the moment. And then you have the property component, which provides, I guess, a diversification from the retail earnings. I'm curious with Craig, just to put you on the spot.
Yeah, we let her do this.
I mean, I hear stories of people going to Singapore and bringing, you know, shipments of furniture back. I've never heard the opposite, people taking shipments of furniture from Australia to Asia. So what do you see as the central attraction of the Harvey Norman story in a place like Singapore?
And Malaysia too.
Malaysia.
Malaysia. Yeah, look, they're bringing, you know, if we blindfolded you and put you in a store in Singapore, it looks exactly like you know, one of the better stores that Harvey Norman has here in Sydney, the Auburn mega store. You know, it's the same type of merchandise in areas like electronics. Obviously, it's the same sort of brands that you can buy globally in any of these markets. You know, what they do is offer good service. It's well merchandised in terms of the layout, and, you know, you can imagine in both of those countries, it's appealing to a more aspiring customer.
Let's go to JB Hi-Fi next. We've covered Jerry.
Yep.
JB seems to get things right. What do you think, Mark?
Yeah, we like JB Hi-Fi in the space, actually. I mean, it's not immune from the sort of the housing downturn and the greater pressures on the consumer, but I think what we've seen with JB Hi-Fi is that they are excellent retailers. And, you know, you talk to management, you talk to various tiers of management right down through JB Hi-Fi, and retailing is in their blood. And you go into a store, you have that negotiation. You can learn a lot about the product in store. It's generally a very good experience. And I think, bigger picture, we do have the consumer cycle, but there is, I think, a structural move towards electronics in our lives. So I'm not particularly insightful for saying that or suggesting that, but it is becoming a much bigger part of our lives. And I think, at the moment, for example, the home security is another emerging category that was not there 12 or 18 months ago, and that could become a bigger part for JB. So,
Craig, Citi on JB Hi-Fi?
Yeah, we're a sell. We're pretty gloomy on that one.
You've always been a hard man. You don't look like a hard man, but you are.
I do it with a smile on my face. It's look, for JB Hi-Fi, it's the battle between good management versus the cycle that they're facing. An area like home security is a good opportunity, but they've still got a lot of sales, about 10%, about 8% of their sales in CDs and DVDs. We know where that's going. TVs is still a very challenged category. We are seeing some trading up, but it's still quite a tough market. So for all their success, it's about trying to grow off a very good base of success, which is just getting very hard for that business. And then on a 3-5 year horizon, we've got the Amazon threat on a whole bunch of their categories.
Okay, quickly, Julia, JB Hi-Fi?
I'm kind of in the middle. When it comes to, I guess, retailers, you want to see that store expansion happening. And for JB Hi-Fi, probably a lot of that's already in the past and not ahead of it. Having said that, I walked into a JB Hi-Fi shop last week trying to buy some headphones for my daughter and couldn't find the headphones, but walked out with a $200 educational software kit.
Yeah, that's a good point. That's good. Okay, guys, thanks very much for joining us. And of course, we hope you're absolutely 100% right as well.